Good morning, Paul Georgie from Allendale. It's July 8th, 2010. Well, the outside markets are going to provide some direction, I believe, to the grain markets here today. The dollar is steady. Crude oil is seeing a bounce off of the rosy unemployment numbers. They dropped, which was encouraging to the crude traders. Right now we've got crude oil up 127. Stock market is anywhere from 30 to 40 higher in the indexes at this point in time. The energy's also got a boost yesterday from the API numbers. Said that inventories were down 7.3 million barrels. That's going to cause a lot of interest this morning for the EIA numbers, which come out at 9:30 here today. The grain markets expected to open a little higher. Corn 1 to 2 higher. The buying interest there has come from funds or money from outside sources. It certainly hasn't been from the fundamental side of things. Even though some stories have been circulating that some analysts are looking for a reduction in yield numbers from the USDA. We don't think so. We think they'll keep it pretty much the same. Very little adjustment there. Crop conditions still look good. There was rumors yesterday that China was in doing some buying. I don't think so. That's not the type of buying that they would do. They normally buy at the lows and sell at the highs. So those are factors that we're all looking for reasons why the market jumped so much yesterday. But bottom line is money supply. We had more buyers yesterday. The large funds came in and bought anywhere from 15 to 20,000 contracts yesterday in corn. That certainly was a reason for this corn market to jump as much as it has. Right now we've got technical resistance 391.5. If we jump above that, we will hit some more stops, we think. However, I think working our way to $4 is going to be a chore here. There's going to run into a lot of selling as we move closer to that $4 level. Talking to farmers, producers, there's a lot of interest in selling corn in the December contract around that $4 area. Support, we would have to say, is yesterday's low at the 378.5 area. The big news this week is tomorrow morning, the USDA supply demand. Traders are focusing on that number. What is the USDA going to give us? We've seen the stocks report show higher usage numbers. Less stocks here last week. Is the USDA going to put those adjustments in the balance sheet, and how much of an adjustment they're going to put in the balance sheet? So this is things that we'll be looking for tomorrow morning. Right now, I would say the bias is to the friendly side, just from the trade standpoint, on what the USDA might say. In the soybeans, they've kind of followed the corn market here. In the last few days, we did see a big surge in the bean prices late yesterday on stops, on some more fund buying late in the session. Basically a technical move that caused this bean market to jump. We expect to see some retracement, some profit taking here today. The fundamentals certainly do not justify the buying this market at this level. But you've got to be careful, and you got to go with the flow. I don't know if it's something you want to step in front of right now, especially with the fund buying here in a big way yesterday. You would think that normally they would come in about a 3-day increment, so we may see some more fund buying here today in today's session as well. The wheat market, funds were big buyers there yesterday, 7,000 to 8,000 contracts. It's reported here this morning that the funds are now long the market versus being short the market, and short the market in a big way for many months. So that is a change of attitude there, and something to monitor very closely. If they're long, they have a tendency to build that position, and that certainly could drive this wheat market higher. maybe not at the pace that we've been going up here in the last few days, but the bias is to the long side as long as these funds are working on the long position. We're moving through harvest, over 50% done, so those are things to monitor as well. Crops or the crop condition seems to be in good shape. Producers are telling us they've got some excellent wheat that's being harvested now. Test weights are fine. Protein is good, so maybe it's time for the wheat producer to be able to make a few bucks here. In the cattle trade, we had cash cattle trade yesterday at the $91 area. That's we've been holding that $91 here for about 4 weeks right now. But the cutout values were up slightly, up 32 cents in choice, up 19, or actually down 19 cents in the select. The demand for meat is going to slow down here as we go into the later part of July. It normally called the dog days of summer, when you got more traveling taking place, less overall consumption of meat. And that's going to be the battle that we've got to fight here in this cattle trade for the next few weeks. The technical action in the cattle, we've got support at around the 89.40 area in the August contract, resistance at 90.85. If we could break through this 90.85, $91 area, it certainly opens the door for a move up to the 92, 93 area. The cattle this morning are called anywhere from 20 to 40 higher. In the hogs, cutout values were down there, $1.05 yesterday. We're sitting right on some major support. This $80 area in the August contract is key support. If we close below that, there isn't much technical support until we get down to the $78 area. And with the heaviness in supply and in cutout values, I think if you're trading the hog market from the long side, make sure you use risk protection, because there could be a pretty good slide here if if the $80 area doesn't hold. Resistance crosses up around the 81.20 area, and that puts us back into the middle of a trading range that we've developed here over the last several days. If you got any questions, give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you tomorrow morning.